I have with me Ron Cross. He is an investment property advisor, and we're going to be talking about how Australia compares to other countries in the world regarding property. Ron, welcome to Dollars or Cents again.
Great to be back.
That's fantastic. Now, Australia compared to other places in the world. Australians, we love knocking Australians, but really, are we really that bad off?
No, really, Dallas, and it's my pet subject because, as you know, I travel extensively overseas. And
the lifestyles of the rich and famous, Ron.
That's all work. And I compare our major cities in the world, such as London, Paris, New York, and I look at those prices of properties there and how they've been performing over the last few years, particularly with the global financial crisis, because we need to have a crystal ball in our businesses to find out our planning for the future. When you look at what we have in Australia, people don't realise that the city of Sydney, the city of Melbourne, are as large as the second largest city in America, which is New York. But yet our prices on real estate in these cities on a comparison basis are about 25%. Our prices are 25% of comparable properties in those cities.
25% down?
Down. 25% of the cost. So it's a quarter of the cost.
Oh, really?
Of comparable cities in those, comparable dwellings in those major cities. But yet our cities are nearly as large as them. And you take the city of Melbourne, they're now talking about Melbourne becoming the Manhattan of the South Pacific. And our population in this country is actually increasing by some 10,000 people each week. So in the next 20 or 30 years, I have no doubt that our cities will be possibly as large as the New Yorks and the Parises and the Londons as far as people living there and working in those major cities. So when you look at our property prices today that we're comparing them with the Londons, the New Yorks and the Paris, there's great opportunities in this wonderful country that we call home, Australia, the land of milk and honey. When I came here in 1954, my father forbid me to buy a motor vehicle when I was able to buy a car. And he said to me, Ron, buy bricks and mortar. Then you can buy in the future any car that you want. Do you know what? He was truthful. He knew exactly what he meant actually happened for me. I can buy any car that I want today because I've stuck with bricks and mortar in this wonderful country. Since I've been in this country, the population has increased from 7 million to 23 million. And in the next 30 years, it's going to go to something like 40 million. Can you imagine the young people that's watching this program tonight understanding what that means? It's taken 250 years to get to 23 million, but we're going to get to 40 million in the next 30 years. That's going to create a great deal of opportunities if you look at the major cities in the world and how they've performed over the last 25 and 30 years.
So you're really looking at Australia or Sydney, Melbourne, to a lesser extent, we'll say Adelaide, just for the sake of it.
Nothing wrong with Adelaide. Adelaide is going to perform magnificently over the next 10 years.
You really believe that?
Without a doubt. It's going to come off a low price base. It's got a lot of activity in the mining sector there to happen. We know the Olympic Dam will be happening there. I'm positive that BHP will proceed with that dam. Mightn't be at the same scale as they originally were thinking of, but it's certainly going to happen. And then you've got Perth, and Perth, right at this moment, property prices in Perth are more expensive than comparable properties in Sydney, and definitely 30 to 40% more expensive than comparable prices in Melbourne.
But Perth has gone through a huge adjustment though.
No, but the adjustment has stopped now. The adjustment, they went up by something like 50% over the last 7 or 8 years.
Yes.
Came back 12%, and now they're on the move again. So it's just a little hiccup there, and the time factor, that as time goes by, that market now is increasing, and the demand for rental properties in the CBD of Perth is unbelievable.
What about Melbourne?
Melbourne is fabulous. It's been performing magnificently for our company, and we have a great exposure to Melbourne. Personally, I have, our company has, and we have hundreds and hundreds of managements that we look after, and we have very few vacancies, just the normal transition of people moving in and out of Melbourne.
So you really believe that you can put us in the same league as New York?
With absolute certainty.
Why? It's New York's New York.
New York's New York, but we also have Melbourne, which is the most livable city in the world. Now, you know, Melbourne...
But you're from Sydney, you shouldn't be saying that.
But I'm not saying it. The experts are saying that they've been awarded the most livable city in the world. So Melbourne is the most livable city in the world. Sydney's a wonderful city. Sydney has 4.5, 4.6 million people. Melbourne is 4.2 million people. But Melbourne, right at this point in time, is actually growing faster than Sydney.
The international smart money. That's the guys with the money overseas who really don't care if they invest into Australia or New Zealand or wherever the case may be. the big end of town, are they investing into Australia?
Definitely, there's a lot of money coming into Australia now from India, from Asia. We have branches in Singapore, Shanghai, and also Malaysia.
And they're investing here in Australia?
Without a doubt.
Why?
Because they see it as a safe haven. It's the title issue. We get Torrens title, we get strata title, wonderful finance arrangements, good quality balanced tenancy laws, all these wonderful things that we have associated and attached to property investment in this country don't really exist in many other countries on the planet.
One final thing, what do you say to those people who say, I might wait for 12 months until it really solidifies the market?
I think those people that say that really doing themselves an injustice, and also they're doing it at their financial peril, because the simple fact is I believe the next 12 months are going to be extremely good, and the slack will be picked up, and some of the margins that we've lost over the last 12 months will certainly recoup in the next 12 to 18 months. I would say longer than 12 months, up to 18 months, and we could see something like 7, 8 or 9% increase in the value of properties.
Well, when you're talking about 7% increase per annum over 10 years is doubling, which it pretty well does anyway.
Yes.
So you're just saying it's going to go back to where it was?
And there's nothing wrong with that. If we get a doubling, we surely don't want it to rise any more than that, because remember, we have our children and our children's children. We need to be thinking about them as well. So I'm quite content with the 7% capital value increase. Also, the marvellous tax concessions that we get from the government. So we have a 7% increase, we have a 5% rental, that's 12%. Then we have taxation concessions, which is another 1 or 2%. That's a 12 or 13% investment growth factor that we have. That's a wonderful opportunity for you.
We do pay a lot of tax in Australia. It's nice to get some of it back though, respectively.
Yes, we do pay a lot of tax, Dallas. But also the mechanism is there for you to lessen your tax burden, and the government is happy to support that, providing you're also doing something that the government wants, and that's buying investment properties and providing rental accommodation for people that can't afford to buy.
Ron, thank you.
My pleasure.
Well, there you have it. Ron Cross. He's an investment property advisor, and we've been talking about how to compare Australia to overseas. It seems like with Ron, he thinks Australia might not be a bad place to invest. Thanks for watching Dollars with Sense.